Ms. Bovino, what are the most formidable challenges facing the U.S. economy?
Well, certainly there are a few things out there that weigh on my mind. Top of the list, of course, is what's happening in D.C. Will the U.S. government come to some kind of compromise and allow that the continuing resolution that expires at the end of September be extended further? The debt ceiling is also an issue, which I believe the Treasury will hit that debt ceiling sometime in October or November. Both things that weigh on the economy certainly cause businesses to be concerned and hold back on spending and investing. There's other factors, of course, that play into other factors. A lot of them are policy related. What's happening with Europe? The Europe debt ceiling, the Europe sovereign crisis there. Could that show up on U.S. shores and cause banks to hold back on lending as well? Final thing I'd say that worries me is what's happening with the labor market. We are seeing an improvement in the labor market, but still we have a lot of people unemployed, for a long time. That means that those people, when they finally do get a job, will have smaller wages. And indeed, the longer they stay out of the work, the more that hurts their skills. So those wages will be even smaller still.
Thank you. 4 years after the official end of the Great Recession, what are the greatest strengths in the U.S. economy?
Well, I like that question because there are some things that have changed. Indeed, after 4 years of basically tightening our belts, households holding back on spending and saving a bit more, businesses also sitting on a lot of cash because they held back. This puts us in a good place. And indeed, one of the bright spots I see for this U.S. economy is that we've been able to absorb, the private sector has been able to absorb 2 fiscal shocks, both the sequestration and the cliff deal in January, and still have been able to spend and invest. Indeed, businesses are still hiring. We've had businesses hire about 200,000 job gains per month through this year with sequestration in place. So I think that is a positive because that means people can spend a bit more, which indeed they are doing. Certainly they're buying new homes, which is also a strength for the U.S. economy.
What effect does the ongoing gridlock in our nation's capital have on the national economy?
The weight of the gridlock from D.C. has certainly caused businesses to be a little bit more reluctant to spend and invest, holding back a little bit more. Not as much as we feared, which is positive, but it certainly is an impact. And sequestration itself has certainly taken off about 1% off of growth over the last 2 quarters because federal budgets are much tighter now. And that certainly has weighed on the economy. Another factor to consider, which is really just starting to play into the economy, is furloughs. Furloughs are really going to start kicking in, started to kick in July in full gear. That means people who are working for the government have smaller paychecks to spend. That might be a weight on consumer spending down the road.
The last time there was a debate over the U.S. debt ceiling, Standard & Poor's downgraded its U.S. debt rating. Given the continuing schism between the administration and Congress, what are the prospects for another downgrade?
The sovereign group, the sovereign group at that time factored in the weak governance as one of the reasons why they did the downgrade. So that's already something that's already factored into their scenario. Indeed, later on, with the sequestration and also with the cliff deal that when it went to effect in January, we're seeing the economy actually getting stronger and stronger. Indeed, enough so that the Sovereign's rating group has removed the negative action on their rating of AA+. That means that the Sovereign Ratings Group now expects that there's a less than 1/3 chance of another rating action, an improving scenario. They also, however, made it clear that if the federal government removes some of this consolidation, like the sequestration or other factors that is already in place, and does not put in a commensurary offsetting factor, that would then certainly cause risk of rating action.
Which economic sectors look the most promising and which ones concerned you?
I would say that right now, energy. Energy is something, again, it's small in the United States, but I see that something as growing and growing, and I see that as not something a near-term boom, something that we expect will develop even further. U.S. energy production is expected to become U.S. energy production is expected to be the largest in the world, surpassing Saudi Arabia. The knockdown effects are also very, very nicely known. helps bring manufacturing back to the U.S. It also makes electric bills a lot cheaper pretty much across most of the U.S. All positive. Now, there you can see a knockdown effect in terms of infrastructure. We need to see infrastructure. Pipelines need to be in place, and actually maybe improve the railroads to be able to get this energy out across the U.S. and even to export out of the U.S. as well. Now, manufacturing also a strength. I think that will continue along the road. Probably the weakness I see is what's happening with consumer spending, which is again one of the large chunk of the U.S. economy. And we need to see jobs coming back. Right now, 7.4% unemployment rate, a lot better than the 10% we saw just a few years ago, but we need to see that get back to normal levels of, like, say, the historic average of 6%. And that seems to be a little ways away. I would say there, in terms of while we are seeing our balance sheets start to heal, a positive for the U.S. economy, it may mean that because of basically 401ks were certainly depleted during this recession and weak recovery, might not see as much leisure travel as we did for those retirees as we would have in the past.
How does an aging workforce affect the U.S. economy?
Well, one of the things that certainly during this crisis and recession, a lot of the baby boomers stayed to work. Well, basically they saw their nest eggs start to shrink, so they continued to work. But eventually they do have to retire. And one of the weights that we see, particularly for the federal budget, is that right now, in 2010, you had 4 workers able to pay for the retirement benefits of 1 retiree. But in about 20 years, you're only going to have 2 workers to pay for one of those benefits for 1 retiree. That's going to be a big weight on public finances, and something certainly to consider down the road. Now, there's a lot of questions about what will happen with the legal age. Will it go up to 67? Will it go up to 70? These are questions that need to be addressed, and I suppose that states and local governments need to focus on that as well.